Now, all of the Medicare players are preparing their 2024 rates now, so they have to really jigger. Not all of them, Kelly, have the same scale in terms of those services that UnitedHealth does, so they may not be able to manage it quite as well. And remember, like CVS's Aetna, they're already under pressure to offer more services next year to be more competitive.
UNH has gone from the 14th biggest S&P company in 2020 to the 6th as of the end of last year. I mean, it is a mess. I don't even like talking about it because every time I see these names, I feel, you know when we're all dealing with insurance and it's the last thing the last phone call you want to make, just showing it on the screen is like giving me trauma. Let's bring in John Ransom of Raymond James now. He was on Power Lunch just a few days ago to preview these results after upgrading UNH to strong buy. John, I was joking I was going to jinx the results, and they didn't miss, but why do you think the stock's struggling today?
Yeah, Kelly, if you pull up a chart of the past, say, 3 months, the stock went up when CMS, and Bertha was talking about it, but when CMS decided to phase in these rules over 3 years versus 1 year. And what United had been telling the street was, hey, if it's 1 year, it is a material hit to our Optum Health, but we can still get to the 13 to 16% growth. And that was kind of the important message. So phasing it in over 3 years is even better. And just to explain one quick thing, United and Humana are really the only vertically integrated MA plans, meaning that they have large physician groups. And so what they do is they'll take, say, $14,000 from Medicare. They'll earn their 15% margin in the insurance company. And luckily, if they've got a patient in their physician network, then they send that, say, $12,000 to their physician network. And if that doctor can provide the all-in care for the patient for, say, $10,000, then they're making $4,000 of gross profit versus, say, $2,000 if they're just caring for that patient and the insurance company. So United and Humana are way down the road with this, kind of vertically integrated double-dip strategy. That's why CVS spent, $10 billion buying Oak Health, because they're trying to play catch-up. So that's really the big news here is the big plans, Humana and United, are lengthening their share and market share, and they have this vertically integrated strategy where they can basically double the gross profit.
Is there, John, a read-through into kind of the cost or price of healthcare services for the rest of us from these results?
That's a good question. It's a complicated quarter because you had a prior period reserve, which means you over-accrued last year. That reduces the medical cost ratio. You had an Omicron comparison, and then you had, so all in, medical costs were up about 40 basis points if you ignore the prior period development. So, yeah, I think even with a lot of Omicron spending, medical costs were up this quarter. And I don't know if it's an inflation thing as much as it is a utilization thing. We are seeing patients get back to get particularly scans. They're getting good news. They're getting x-rays and MRIs and mammograms. And then we also think there was a little jump in surgeries this quarter. Surgeries were really soft in the fourth quarter, so we think there was a bit of a catch-up trade in surgeries this quarter. That's an open question, see what happens in the second quarter, but all our surveys were coming in a little bit hot on medical costs this quarter.
All right.